Hello, everybody. This is Alan Elman, the Blue Collar Investor, and welcome to this sample trade video regarding a trade that I executed on Monday, March 31st, 2025, for an expiration on Friday, April 4th, 2025. So this is a one-week defensive cash secured put trade with Wheaton Precious Metals listed on the New York Stock Exchange under the ticker symbol WPM. Now, before I get into this trade, let me give you a little backdrop as to what's going on in the market as I create this video. Yesterday was what was deemed tariff day, where the government laid out its plans for tariffs related to our trading partners. Now, the market was not happy with what it heard. And so this morning, as of almost 8 a.m. pre-market, the futures are down precipitously. Let me just read you what I jotted down before I started creating this video. The Dow futures were down 1,250 points. The S&P futures were down 200 points. And the NASDAQ futures were down almost 800 points. So it's quite ugly what's going to be happening in the market, at least on open. Of course, nobody knows what's going to happen after the market opens. It's a very volatile market. There's a lot of uncertainty and chaos. So anything is possible. We do know this. It's going to open up quite a ways down. And that is includes the stock that I'm going to be talking about in this video, Wheaton Precious Metals, WPM. Okay, so I told you before that this is a defensive one-week cash secured trade. And the reason I've been opting for defensive trades is because of the tariff situation and the uncertainty involved in it and the impact that it potentially can have on our economy and, of course, then on our stock market. So I've been taking only defensive trades relating to covered calls or cash secured puts. So here's the reason why I selected Wheaton from our premium stock report. Of course, this is a stock that has passed all of our rigorous screens. So it is an elite performer from fundamental, technical, and common sense perspectives. Now, when I executed the trade on Monday, Wheaton was trading at 76.99. It's less than that now, but that's where the trade was entered. And it came from our BCI database. It just entered our premium stock list this week. This is the first week it's on. It had been on previously, but got bumped off. As I said, it's very difficult to pass all of our rigorous screens. Now, it does have a dividend of 0.8% annually, and the ex-dividend date is 4/1. So actually, the ex-dividend date recently passed with this trade. It was on Tuesday, and so that impacts those of us that have perhaps covered call positions, and we don't want our shares taken away, but it doesn't impact those of us that sell puts. Okay, now the implied volatility is moderate with Wheaton at 29.7 when I entered the trade. So, a little bit more than that of the S&P 500. It is in the mining industry, which currently is ranked A, and the next earnings report is June 12th, so outside the expiration of this 4/4 contract. The on-balance volume is bullish, which means more money is coming in on up days than on down days, and it had a very stellar mean analyst rating of 1.35, 1 being the best and 5 being the worst. So that was also a bullish signal. Weekly options obviously are available because that's what I used. And at the time, I used the out of the money 74 cash secured put, again expiring this Friday, 4/4, so tomorrow. And it had a bid price of 40 cents. So let's have a look first at the original calculations and then the current status of this trade pre-market. I'm going to factor in that it's going to be it's opening down $2.64. In other words, the whole market today, this morning anyway, is crashing down. And so Wheaton was down $2.64 pre-market before I started this video. So I'm going to use that as a frame of reference. Okay, so let's first look at the original calculations I executed. Remember now that it was trading at 76.99, and we do the 74 out of the money cash secured put for 40 cents. Where do we stand? Well, we know it's a 5-day trade, and we know that the spreadsheet will tell us that the actual return is 0.54% for the 5 days, which annualizes out to better than 39%. So we have a very, very nice 5-day return with a break-even price point at 73.60 from the, at the time when I entered the trade, 76.99. Okay, where do we stand now pre-market? Well, as I said, Wheaton was down $2.64 pre-market. So that means that 75.02 would be the opening price. It was up the previous couple of days. So that means that it's up $1.02 over the put strike. So it could still go down another $1.02, and the shares will not be sold or put to us, assuming no exit strategy intervention. So despite the downturn pre-market, we're still sitting okay regarding the put strike. Now we have even more protection to break even, in this case, $1.42. So based on an opening price of 75.02, which incorporates the pre-market down amount of 264, we're still in a winning position with this trade, which has 2 trading days remaining to expiration. Now, that's not to say it's definitely going to be a winning trade, but what it does show that when we take a defensive posture in a market environment that's volatile or bearish or uncertain or chaotic, whatever adjective you want to give to the current market, that we could still make money and still give ourselves plenty of protection to the downside at the same time. And that's what my goal was when I initiated this trade. So the final results are yet to be determined, but so far I'm okay. And we'll just kind of monitor this trade. I am prepared for exit strategy executions if those opportunities arise, but right now there is no need for that. So that ends this sample video on a trade that I'm actually involved with today as I'm creating this video. Ladies and gentlemen, I hope you find these videos useful. More importantly, I hope they put cash in your pockets. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.